So today we are going to be doing the 2015 tabular 60 mark question. So to begin, as always, we have to do our template. So we start off with our assets. Now this one, unlike the last one, we're actually given a value for goodwill as an asset for 45,000. So I'm going to pop that in, whereas normally in other questions you put down goodwill but you don't normally have something for it, but in this case they've given you something. They've given you 45,000. Okay, so you pop that in. Your land and buildings, and this time as well we've got three. We've got land, well, we've got four assets with the goodwill. We've got land and buildings as well, equipment and delivery vans, so they all have to go in. So depreciation on buildings, land and buildings is 690,000. Then you put in your depreciation and it's negative, so 55,100. Then our equipment is 30,000 and then negative 2,500 for depreciation. And then delivery vans is 86,000 and depreciation is 32. Then the goodwill, we've seen where that came from. And then your stock, insurance, prepaid and debtors. Okay, so your stock 73,600, your debtors 52,900, and your insurance prepaid 1,000. Okay, so insurance is an expense that goes to a company, but if they prepaid it, then it's an asset, okay, because they prepaid it and now the insurance company owes them insurance. Okay, so then we get our total assets when we add them up to, changed my colour of my pen, so 900. Okay, I need to put it down here as well. 900. Okay, so then we get our ordinary shares, and our share premium always goes there at the start there. So our ordinary shares are 480,000 and our share premium is 75,000, so they pop them in there. Then your profit and loss balance, which are given there, is 236,000. Then we go back up to our liabilities and we see we've got creditors there at 82,300. We have bank, which is an overdraft, it's liability 11,900, and then expenses due 3,700, and then of course your valuation reserve always goes in there as well. And then we leave one blank for something else. Okay, so we're going to start off then with January. Well, actually as well, don't forget you look here to know how many columns you need. You always start off with the first, which we've done for the year. Then in this case we have January, February, April, May, July, November and December, and then we have an end of year column. Okay, so January. Watt Ltd bought an adjoining business on the 1st of the 1st 2014, which included buildings 240,000. Okay, so we'll pop that in here. 240,000. Delivery vans 42,000, so we'll pop that in here. Delivery vans 42,000. Then creditors 54,000, so we go to our creditors and we put in 54,000. The purchase price was discharged by granting the seller 220,000 shares in Watt Ltd at a premium of 20 cents per share. So our ordinary shares, we put down 220,000. And then our share premium, so it's 20 cents, so that's 220,000 multiplied by 0.2, and that's 44,000. So they paid 44,000. There, okay. Now, we have to work out the goodwill. So if we add up these three here, we'll get 318,000. Now, so to work out our goodwill, it's 318,000. So my total liabilities minus the 240,000. So my figures there, in the assets, 240,000 minus 42,000, and that gives us 36,000. So go to goodwill there and put in 36,000. Okay, we explained in yesterday's video what goodwill is. Your total assets then is going to be 318,000. Okay, so just to recap then, so goodwill is the extra amount that you pay over the value of the business. Okay, so you work that out by adding up your liabilities, take it away from the assets, and then what's left is your goodwill. Okay, on to February. A creditor who was owed 2,500 by Watt Ltd accepted a fridge freezer, the book value of which was 2,200 in full settlement of the debt. So they gave us a €300 discount. The fridge freezer had cost 4,000. Okay, so we go to our February and we go to equipment and we come across and our equipment is going to be reduced by 4,000. So we've given away that fridge freezer. Okay. Then for the depreciation, well, it was 4,000. Its current value is 2,800. So you take the 2,200 from the 4,000 and that's 1,800. And I'm not putting it in brackets because this is cancelling out that 1,800 depreciation because you've gotten rid of that fridge freezer. Okay, so if you put that together then that will give you a negative 2,200 when you add your negative 4,000 and your 1,800 together. Okay, into our profit and loss then. So we've made a profit of 300 and now we need to reduce our creditors. We no longer owe them that 2,500 and then 2,500 plus 300 will give me negative 2,200. Okay, now we're going to go on to April. We've no March. Watt Ltd decided to revalue the land and buildings on the 1st of April 2014 at 990,000. The land element of the new value is 170,000. So we'll be, when we're at the end, when we're getting depreciation at the end of the year, we'll be taking into account that land figure. So for the moment, we are... Okay, so we know that our current value of our land and buildings is 690,000 plus 240,000. And they want to revalue it up to 990,000. So if you get your calculator, 990,000, you take away your 690,000 and your 240,000. So that means that it's an increase of 60,000. So you add these two together to get your total value of your land and buildings, and then you take it away from the revalue figure of 990,000 and that will give you 60,000. So land and buildings we put in for April, 60,000. Okay, now we need to put in the depreciation. So we need to get rid of when you revalue, get rid of depreciation. So to cancel it out, we're going to put a positive 55,100 because negative 55,100 plus positive 55,100 gives you 0. So that's cancelled that out. So when you add the two of them together, then you get 115,100. So the revaluation reserve is always the increase and the depreciation added together to give you a true figure of how much the building was revalued. So that's 115,100 and that'll give you 115,100. Okay, so now we're on to May. May received a bank statement at the end of May showing a direct debit of 3,600 to cover fire insurance for the year ended 31st of 3rd 2015 and a credit transfer received of 8,600 to cover 10 months rent receivable in advance from May the 1st. Okay, so we put in the full figures and then just like in the previous question, when we go back to December, then we will sort those out. So we'll start off with the 3,600 for the insurance. So we go to our insurance prepaid there and we pop in our 3,600. So that gives a total of 3,600. And then the rent receivable of 8,600, we will pop that in. So rent receivable then, so we need to write that in here. Rent receivable. And that's 8,600, and we'll balance them off at the end. Okay, so you have paid 3,600, okay, from your insurance prepaid, and you have rent receivable, you've received 8,600 in rent. So that means that then with your bank account, you received 8,600, you paid out 3,600, so that'll give you a balance of 5,000. So your bank then, and it's going to reduce your overdraft, so 5,000. And then minus 5,000 plus the 8,600 will give you 3,600. Okay, so next then we are going to July. A delivery van which cost 15,000 and had a net book value of 3,000 was traded in against a new van costing 24,000 on the 1st July 2014. Allowance of 4,500 was made for the old van. Okay, so first thing we're going to look at our delivery vans. So we have to reduce our delivery vans by 15,000 and then increase it by 24,000. So to put that together then, with just 24,000, take away 15,000 is 9,000. So it's going to increase by 9,000. So go to delivery vans, go to July and pop in 9,000. Okay, the next thing we need to do is we need to cancel out the depreciation on the van you got rid of. So 15,000, it has a net book value of 3,000, so it's depreciated by 12,000. So we put 12,000 in here in our depreciation on delivery van, so that'll cancel that out. So if you add those two together, you get 21,000. Then the next thing is, so your profit, to work out if you made a profit or loss when you sold the van. So if you see here, it had net book value of 3,000. An allowance of 4,000 was made for the old van, so you made a profit of 1,500. Okay, so we go to our profit and loss here, and we come across to July and we put in positive 1,500 because we made a profit. Okay, then we have to work out how much that we paid. So it was 24,000. And we got an allowance of 4,500, so take away 4,500 and that gives you 19,500, and that's going to increase your overdraft. So you go to your bank and you come across and you put in 19,500 because that's how much you paid for the vehicle. So you add these two together and you get 21,000. Okay, so now we're on to November. A payment of 1,260 was received from T. McDonough, a debtor whose debt had previously been written off and who now wishes to trade with Watt Ltd again. This represents 90% of the original debt, and the debtor had undertaken to pay the remainder of the debt in January 2015. On the same day, goods to the value of 720 were sold on credit to McDonough. This is a markup of 20%. Okay, so a payment of the 1,260, and I said that represented 90%. So to work out what the total debt was then is our 1,260 divided by 90 multiplied by 100. So it's actually 1,400. Okay, so 1,400, take away the 1,260 that they're after paying us. that leaves 140. So they now owe us 140. So that goes into our debtors as 140. Okay. The 720 then in our debtors is on the same day goods to the value of 720 were sold on credit to McDonagh. So that's 720 and that'll give you a total of 860. Okay. Then we have in the bank, you received from them 1260, so that's going to reduce your bank overdraft. So that's 1260. And then we have to work out our stock, okay? You can see here I've worked out 600. And how did I do that? Well, we were told that the goods of the value of 720 were markup of 20%. So to get the cost price, we want 100%. So it's 720 divided by 120 multiplied by 100. And that'll give you a total of 600. So stock is always the cost price. So that's 600 there. And then finally, our profit and our loss balance is the 120 that 20 profit that we're making on the goods that we're selling them, because we said we were selling them 720, cost 600 to make, so we're making a profit 120, and then the 1400 is the reinstated bad debt that was written off, so the 1400, so that'll give me a total of 1520, and that goes in there. Right now on to last month, December. The depreciation charge on buildings for the year is to be 2% of value on the 1st of the 4th, 2014. Depreciate delivery vans at 20% of cost per annum from date of purchase to date of sale. Right. So you can notice that it doesn't mention equipment, so we don't need to worry about getting depreciation for equipment. Okay, so doing our buildings, depreciation, 990,000, that's what was revalued to. Take away the land element of 170,000, so that was given to us in April. It said the land element of the new value is 170,000. So that gives us 820,000 multiplied by the 0.02, the rate they gave us, and that'll give us 16,400. So our 16,400 goes in here, our depreciation, our land and buildings, and as a depreciation it's negative. Then we come down to our profit and loss, and it's a negative 16,400 in our profit and loss balance. Okay, so now we need to work out our delivery vans. And it tells us 20% of cost ran from date of purchase to date of sale. Okay, so if we look here, at the start of the year, we had delivery vans 86,000. And then in January, so the start of the year, we acquired delivery vans worth 42,000. So add the two of them together. 86,000 plus 42,000 will give you 128,000. So 128,000 multiplied by 0.2 will give us 25,600. So that's the total depreciation on them. Then in July, we acquired vehicles worth 9,000. So that's 9,000 multiplied by 0. Now that should be 0.2, not 0. Sorry, yeah, 0.2, because 20%, not 2%. Multiply by 6 over 12, because you got it in July. So July, August, September, October, November, December. That gives you 6 months. So that's 900. So now we add the 25,600 plus the 900 together, and we get 26,500. So that goes into your depreciation on delivery vans, 26,500. And it's depreciation, it's negative. And then we pop it down here in a profit and loss, negative 26,500. Okay, now we've got one more thing to do. We have to come back up to May, to when we received a bank statement. Okay, so the insurance is the first thing. Showing 3,000 to cover insurance for the year ended 31st of the 3rd, 2015. Okay, so we have to work out how many months the insurance is for this year. So I always say use your fingers because it's very easy to make a mistake here. So it's the 31st of March, we don't include March. So we have April, May, June, July, August, September, October, November, December. So 9 months for this year and 3 months prepaid. So you can see here, insurance is 3,600 multiplied by 9 over 12 because we're working out how many months the insurance was covered for this year. So it's 2,700. Then I add the 1,000 that were given at the start on the 1st of the 1st, and that'll give you a total of 3,700. So I go here and I deduct 3,700. And I also put it in, it's a loss because we're paying it out of 3,700. So that's how much insurance for this year we paid, 3,700. Now you can see I should have left more space for the profit and loss balance because I'm going to find it very hard of one more thing to put in here. Okay, so it tells us that a credit transfer of 8,600 to cover 10 months rent receivable in advance from May the 1st. So that 10 months is important. We'll see that in a minute. So from May the 1st, so you include May, so May, June, July, August, September, October, November, December. So it's 8 months for this year and then 2 months for next year. So it's 8,600 multiplied by 8. And we're only dividing by 10 because it's not the 12 months, it's just the 10 months. And that will give me 6,880. So that's how much you received for this year. So I'll pop in there a profit and loss. It's positive 6,880. And then the rent receivable, we put in negative 6,880. So that will give me a total then of up here. So that will give me a negative 46,600 and then the same down here. Okay, so then we're going to do our totals, adding across. So stop the video, do your totals and check it out. Okay, and there's your totals. Just remember as well that when you're adding across, like for example your profit and loss balance, that you're adding them all and you're taking away this figure, taking away this one, taking away this one, adding this one.